Buy Malawi Strategy in slow uptake. We find out why. And commercial banks protest 40% tax. Hello and welcome to this week's edition of the program Business Time, a magazine program in which we bring you major business and economic news stories making headlines in the country. And my name is William Kumwembe. Hello and welcome. This is Business Time and my name is William Kumwembe. In our main story in the program today, lack of consistency in quality, overpricing and low capacity among local producers have been cited among challenges that are stifling the potential of the Buy Malawi strategy. Launched in 2016, the strategy is aimed at enhancing competitiveness of local firms and ensuring import substitution. But about 7 years down the line, the country still seems to register what we call sluggish progress in as far as implementation of the strategy is concerned. What is at stake? This is a question that was asked during a symposium that was held in Blantyre recently by the Institute of Marketers in the country. Our journalist, Kumwembe, was there and has filed this report.
Speaking at a Buy Malawi town hall meeting organized by the Institute of Marketing in Malawi in Blantyre, Consumers Association of Malawi Executive Director John Capito faulted local producers for the strategy's failure. He said many producers do not have the capacity to produce on a large scale and that they have been able to get away with substandard products and packaging which cannot compete with foreign products. Minister of Trade and Industry Simplex Chicholabanda says the government has made strides in the promotion and marketing of local products but is open to input as a new strategy will be put in place.
Malawian producers should reach a level where the products from their production should meet the international standards so that they competitively withstand to the pressures of the international as well as domestic market. The Buy Malawi Strategy 1 is nearly expired, and then we'll be going into Buy Malawi Strategy 2. So the beauty of the participation here is that we've harvested quite a number of positive comments that will be put into the Buy Malawi Strategy 2. That's number one. Number two is that there are positive comments in terms of now consumers liking the local products and the local services. I indicated here that the hotels have deliberately started dishing out the local dishes, but also most MDAs on Fridays, they put on the local and traditional attire. This is in promotion and promoting the Buy Malawi strategy.
Institute of Marketing in Malawi President Isabel Kachinjika says the institute is positioning itself for active involvement in policy making, hence the town hall meeting.
Right, so as the Institute of Marketing in Malawi, we are in the process of pushing for a bill for regularization of the marketing community, the marketing profession. And one of our biggest mandates is to support government efforts in making sure that we have a more productive industry, that we are producing more, that we have better skilled marketers, and the issue of brand Malawi is key to that. So a few months ago, we actually held a webinar where we're looking at consumer perceptions of local versus global brands. And one key thing that came out is that as marketers, it's our responsibility to manage the standards, because now we're operating in a global economy where somebody can decide to get something from another country, they can buy it online. So we're competing with manufacturers across the globe. So as marketers, we need to be able to understand the needs of the clients better and to be able to produce quality items. What we also picked up is that in order for us to be more successful in our endeavors, we need the support of the policymakers. So that's why we thought of having this platform where we would bring in those who are actively involved in marketing, as well as the policymakers, to see how we can complement each other's efforts to make sure that we have a sustainable solution with regards to the industry in Malawi.
Malawi remains a net importer, with its import bill seen at $3 billion per year, while annual revenue from imports stands at $1 billion.
Now, commercial banks in the country under the banner Bankers Association of Malawi have expressed displeasure over the 40% corporate tax on annual profit above 10 billion kwacha. The banks have since rated the tax, which Minister of Finance Sosten Kumwembe announced in March, as selective and punitive. Makfasi Kawawa is president of the Bankers Association of Malawi, and he explains in this interview.
The BAM view was that that tax was selective, somewhat punitive, and it may have unintended consequences. And therefore, upon, of course, respecting that the authorities, can decide what taxes to levy, we found it, appropriate that we engage, the authorities, so that we can express our views, so that going forward, there can be either a correction or, in many forms, either a reversal or indeed, widening, the coverage, so that it's seen to be more or less segregated. We have been trying to engage the Minister of Finance. As I'm saying, I think efforts are underway. There's indication that the Minister is willing to meet us, which is a good thing. So we look forward to that meeting where we'll discuss wider issues, regarding this particular tax, and we do hope that our views will be taken on board as the authorities, look at the tax laws going forward. In the current form, one can cite many, weaknesses about, because, for instance, one would argue that then it actually discourages, performance, or those banks that do well may be seen or may view themselves like their effort and contribution is not being appreciated, because it's like you do so well, then watch the taxman. So we think that we need to highlight that. So we are of the view that if indeed it's temporal, we would expect that it would be advised how temporal and when we may be expecting a reversal, because it's not the banks that said let it be temporal, it's the authorities that say this is just a temporal measure. So we would want to hear how temporal that would be. But then the other input is to say, well, let them examine further. In the form that is being levied now, is it encouraging investment? Would investors be encouraged? Is it fair in the sense that there will be other entities that are not banks, but they're probably making more money than banks? Is it fair that businesses working in the same environment are, taxed in a fashion that is different because they operate in different industries? We think not. So our expectation is that the authorities will listen to us, will take into account our views, and then factor them into, the process of reviewing the tax laws. We know that in revising tax laws, they look at different factors, and ours would be just input into that process. We are law-abiding entities as banks. We pay a lot of taxes. A significant amount of taxes, and I'm sure the government appreciates. So it's not like we don't want to pay taxes, but we think it must be done in a fashion that is fair, but also a fashion that encourages investors. The minister has been busy, lately. I think lots of meetings. We know the country has been, engaging in lots of issues to do with matters of finance involved in the country. So we do understand that the minister has been busy. So we are hoping, though, that we should be able to meet this month before it ends, or if we fail, it should be within a few weeks. But I must mention that it's not that we meet and then action is taken, but rather we see it as a process of engagement with the authorities, so that we share views and that helps in the process of the next review.
Remember, this is Business Time on Times Television, a magazine program in which we bring you major business and economic news stories making headlines in the country. My name is William Kumwembe. We'll be right back. Welcome back. This is Business Time, a magazine program in which we bring you major business and economic news stories making headlines in the country. And my name is William Kumwembe. Moving on with the program, NBS Bank has posted a profit after tax of 18.9 billion kwacha for the year ended December 31st, 2022. This is about 145% jump from about 7.7 billion kwacha the company posted in 2021. This was said at the bank's annual general meeting held on Thursday in Blantyre. Our journalist Kumwembe was there and has this report.
The announcement was made during the bank's annual general meeting in Blantyre on Monday. The bank also declared a 2.6 billion kwacha final dividend, representing 90 tambala per share, bringing the total dividend payout to 9.6 billion kwacha. The dividend is 50% of the bank's total profit, and it has increased by 231% from 2.93 billion kwacha paid out in 2021. NBS Bank chairperson Vizenge Kumwembe says over the past 5 years, the bank has intensified efforts in investing in technology to support digital transactions.
The bank has a strategy, and it had a 5-year strategy which stretched from 2017 to 2021, if I'm not mistaken. And then at that time, the bank was focusing on turning around. Like I said, 2016, 2017, the bank was making losses, turned around, and now it's on a very, very strong footing. So 2022 is the first year of another 5-year strategy that goes on to 2026. And the bank has been working on all fronts. Customer service, for example, we've been working to ensure that our customers are happy. And to do that, we've had to work on various, we had to invest on various platforms for interfacing with clients. And specifically, I would want to mention that we've enhanced our digital platforms where our customers can do banking online. So I also want to mention the investment that the bank has made in its people, both in terms of training and also making sure that staff are competitively rewarded and so on. And that is also is paying off. Obviously, the brand is very strong. We are reaching out to clients across, institutional clients, government and governmental, private sector clients, and also enhancing payment solutions to facilitate transfer and movement of money. So we've been really investing across the bank. And if you look at our performance now, like there was talk that the bank has been relying on investment in government instruments. But if you look at our performance for 2022 in particular, the bank has grown its income line on the forex side, on the retail banking side, and also talking of retail, we've grown our retail loan book, and our loan to deposit ratio, for example, is now sitting at 38%, coming from as low as, I can't even remember how, it was very, very low. But we are growing our loan book, and also, like I said, increasing the online channels so that we make it convenient for our clients. So our income lines are growing on all fronts. Yeah, the issue of unclaimed dividends, we do publish in the papers, inviting our shareholders that we publish the names so that shareholders who see their name on that list can see that they have unclaimed dividend. But what came out of this meeting is that we need to do more work on that by reaching out to our shareholders through various channels, because there are some people who perhaps can be reached by, some shareholders can be reached through the post, but others can only be reached through perhaps email. Others, perhaps we should try to reach out to them by phone, besides publishing names in the list, so in the papers. But as also was, came out here, that the issue of unclaimed dividend is a result of not just one party. There are various parties involved that, if they don't do their work properly, they cause this unclaimed dividends. So there is need for collaboration among transfer secretaries, stock brokers, and of course the bank itself, to ensure that this problem of unclaimed dividend is decisively dealt with and eliminated. And we've undertaken to work on that.
Minority shareholder of listed companies General Secretary Frank Halawa lauded the bank for the positive performance, describing it as satisfactory.
As shareholders of NBS, we are very happy shareholders. I think we can see the light at the end of the tunnel. We've gone through a period where there were no dividends and company was making losses, but now things have turned around the corner, and here we are now. The company is making good profits, 18 billion in this instant, and good dividend payment, and also the capital gains. Look, the share price of NBS just last year, December 2022, it was trading at 22 kwacha. Now it's trading at 133. That's huge for a capital gain. And the company has paid a first dividend, second dividend, and now they'll be paying a final dividend. I think we are happy as shareholders. I think this is what we've been looking for a long time. And here it is happening again. They paid dividend last year, and they're paying a good dividend this year. And we believe there will be good dividends in the future. This has to do with the previous systems of certificates and how people bought shares on the stock market. I think at that time, maybe there were no all these sophisticated phones. People had no addresses and so forth. So it has remained very difficult for companies to reach out to their shareholders, and even maybe at that time they didn't even register the account numbers of those shareholders. So what we're saying to them was to say, let's look into the dematerialization. Remember, now we have stopped using the certificates. It's now digital with the Reserve Bank of Malawi. So I think if we look into the system of dematerialization, then we'll bring more Malawians to the system, and we'll even update their contact details and their accounts. But now the unclaimed dividend that is remaining out there, we are saying the mode of reaching out shouldn't be only the newspapers, but should be every means. Could be SMS messages, could be WhatsApp messages, and so forth. But it's true that there are a lot of unclaimed dividends, and this has to be resolved as soon as possible, because these are Malawians' money and people need their money. The sad part is that most of the shareholders do not even know that there is a dividend that belongs to them, because maybe they bought shares and they don't even know that they can buy. For example, they don't even know that they can buy shares every day on the stock market. They don't even know that after you buy shares, you can earn your dividend. So it's an issue again of awareness.
Results of a customer survey for 2022 demonstrated that the bank's customers were satisfied and loyal to the brand. The bank views the development as a reflection of the effort it has made in addressing customer pain points and positioning itself in the digital era.
Now, another Malawi Stock Exchange listed bank, National Bank of Malawi, has declared a 15 billion dividend representing 32 kwacha 12 tambala for each share. This means that its shareholders will go home smiling, as this is way higher than what the bank declared last year. And the total dividend for the year 2022 stood at 33 billion kwacha, or 43% higher than the 23 billion kwacha that was paid in 2021. This was also said when the bank hosted its annual general meeting in Blantyre last week.
Speaking on Thursday at the bank's annual general meeting in Blantyre, NBM board chairperson Jimmy Lipunga said the bank's cash flow projection remained satisfying.
Very successful, and there's no better evidence than what you saw from the members themselves. These are the people who own the bank, the shareholders, and you know, if they had issues, they would have said it. But what we saw was deep satisfaction with the performance of the bank. 45 billion kwacha net profit, 44% increase in dividends. No one can complain about that. So it's a very good year. This is accumulative, and so what is actually being paid as a fine was 15 billion, and that's after doing a cash flow projection and satisfying ourselves that we are able to pay that dividend without compromising our, our investment proposals and operations. It's a balancing act. We are operating in a very, very difficult environment with high inflation, and so in order to maintain our capital, in order to keep our shareholders, you need to reward them because they expect a decent return on their own investment. And like I said, who are the shareholders? Yes, there may be shareholders that you see as majority shareholder and minority shareholder, but there are also a lot of stakeholders. A lot of pension funds buy shares in these successful banks, successful companies. And so when we offer attractive dividends, we are sharing the cake with the millions of Malawians whose pensions are actually deployed in these banks for a fair return.
One of the bank's minority shareholders, Emmanuel Chinunda, hailed the bank for the positive performance.
I think this is a stellar performance. They have all performed extremely well. And we as shareholders, we are very happy because of the results. Basically, that's what a shareholder is looking for. He's looking for value from his investment. And that is, I think, a thing which everybody is looking for. So all shareholders, including myself, I'm also happy. Most of them, they have actually been very phenomenal. They have gone very high. If you look at the share appreciation, it has been very high in most of the counters. So that is a positive development from a shareholder's point of view. We expect them to continue from where they have actually, the way they have performed. We expect a stellar performance again. We don't want them to actually go back, but to make sure that there is forward movement. And basically, that's the legitimate expectation of shareholders.
The total dividend paid is 71.8% of the 45.9 billion kwacha profit the bank posted in the year.
Well, that story also brings us to the end of today's edition of the program Business Time, a magazine program in which we bring you major business and economic news stories making headlines in the country. My name is William Kumwembe, but on behalf of the entire production team, thank you for watching. But always remember, if it doesn't make money, then it doesn't make sense. Stay safe and bye for now.